All right, welcome back to Profit Path and happy Friday. Today, chipmakers and pharmaceutical stocks took center stage. With Intel leading the charge and big pharma names rallying, we're going to break it all down right here on the channel. But before we get into it, be sure to subscribe so you don't miss tomorrow's moves. All right, let's dive into the markets. So markets opened with a bit of a mixed tone. The Dow Jones Industrial Average was up about 0.5%, while the S&P 500 was little changed. The Nasdaq Composite was down about 0.2%. Let's see what's going on. So the biggest mover today was none other than Intel, which soared over 4%. That makes it the top performer in the Dow today. So what's driving Intel's surge? Well, optimism regarding domestic semiconductor policies and supply chain incentives under the CHIPS Act is fueling the rally. There's a growing sense that Intel might be a key beneficiary of these measures, so this positive sentiment is just spilling over into the stock today. In the healthcare space, pharma stocks were outperforming. Merck, Eli Lilly, and Johnson & Johnson were among the notable gainers with increases of more than 1%. So what's boosting the pharma sector? Well, recent trade measures have signaled higher costs on imported drugs, and this is creating an environment where US-produced pharmaceuticals could become more cost competitive. So essentially, there's a tailwind for the domestic pharma industry, which is why we're seeing these stocks move higher. Now on the flip side, Nvidia, which has been on a tear this year, slipped by about 0.8%. It's not a significant move, but it does mark a bit of a pause in the stock's rally. This could be attributed to a few factors. Investors could be taking some profits after the impressive run-up. Plus, there's this broader rotation that we've been seeing out of some high-growth names as the market digests the latest policy changes and reevaluates their valuations. We've seen similar moves in other growth-oriented sectors as well, so the pullback in Nvidia isn't necessarily a surprise. It does come after an incredible rally in the stock. So perhaps it's just some much-needed consolidation, but it also highlights this broader shift in investor sentiment and the market's evolving dynamics. Industrial and manufacturing names also caught some upward momentum, drawing interest as investors seek exposure to domestic supply chains. This interest is likely fueled by the same trade-related optimism that's boosting sectors like pharma and semiconductors. Companies tied to these resilient supply chains are seen as beneficiaries of the reshaping global dynamics. So overall, the market remains sensitive to policy signals and inflation readings as they continue to inform expectations for the Federal Reserve's policy trajectory and the pace of future rate cuts. This is keeping volatility elevated, and with key inflation data on the horizon, there's a bit of a wait-and-see sentiment in the market. All right, now speaking of what's next, let's shift our focus to the upcoming week. The market's attention is increasingly turning towards the PCE inflation index, scheduled for release next Friday. This index is closely watched by the Federal Reserve, and it provides a comprehensive measure of inflation trends. A softer-than-expected reading could bolster the case for future rate cuts and provide stocks with some room to keep rallying. However, if the data shows persistent inflationary pressures, it could challenge the recent rebound and raise concerns about tighter monetary policy for longer. Investors are also keenly focused on the release of July jobs data on Friday. A robust jobs market could reinforce the notion of a resilient economy and potentially add to rate cut expectations. But surprisingly weak data might spark fears of a slowdown, thereby weighing on stocks. And finally, earnings season is in full swing. Upcoming results from big names like Apple, Amazon, and Meta will be scrutinized for any insights into consumer spending and the broader economic outlook. Positive reports with strong guidance could lift stocks, but if these heavyweights disappoint, it might trigger profit-taking and introduce a dose of pessimism. So here's the key takeaway. The market is in this delicate balancing act. Recent positive momentum is driven by rate cut expectations, strong earnings, and a resilient economy. But lurking on the sidelines are inflation risks and uncertainties over the Fed's policy path. As we navigate through next week's crucial data releases and earnings reports, volatility is likely to persist. The coming days could provide more clarity, but for now, investors are advised to stay nimble, keep a close eye on their portfolios, and be prepared to adjust their strategies based on the unfolding events. All right, to recap, Intel bounced on chip policy optimism, Pharma stocks surged on trade tailwinds, and Nvidia cooled off slightly. The big question now is whether momentum can hold up ahead of key inflation data. What do you think? Will the rally continue, or will we see a pullback? Drop your view in the comments, and if you want to stay up to date on all the market moves, be sure to subscribe to Profit Path. We update you daily, keeping you in the know. Thanks for tuning in. Have a great weekend, and we'll catch you on the next episode.